Uber stock under a bit of pressure, and the company says one of the drags in its latest 3 months was reduced travel to the United States. People, some of them travelers, concerned about hassle at the US border. Let's get more on these results from Rohit Kulkarni, senior analyst at Roth Capital Partners. Rohit, thank you very much indeed for joining us. What jumped out for you with these Uber numbers?
Hey, thanks for having me. I think the biggest kind of surprise on the positive side was the 2Q guidance for bookings. That was above expectations and a clear indication that Uber is not seeing fundamental changes in the demand patterns that they're seeing globally. There might be some pockets of weakness sporadically, geographically speaking, but fundamentally, I think demand for mobility and ride sharing and delivery seems to be stable and, in fact, probably better. The negative was, as you said, exactly. 1Q bookings was slightly below expectations, so perhaps there were pockets of weakness during March that they saw when people were holding back a little bit around travel. But April seems to be off to a good start, and that's the positive surprise.
And the profit was okay as well. The earnings exceeded expectations. Talk to us about Uber One. This is a subscription service, and everybody, all companies want to get regular money out of you every month. That's the model, of course. Software as a service, streaming. The Uber One, apparently, the company is saying, also translates into more business when it comes to ordering food.
Yep. Yeah, absolutely. I think the biggest cost for these companies, large internet consumer platforms, is acquiring a consumer and retaining them and ensuring that they continue to spend more on the platform. That's the biggest cost. So once they have a subscription, the repeat behavior of these consumers starts to feed into how bookings start to grow in a more repeatable fashion. I think that's where having more than 60-70 million people subscribing to your service on a monthly basis, that creates a pretty significant stickiness, repeat behavior, and particularly for food, which again, probably you're sitting around on a Friday night or a Saturday evening, and you have a couple kids who are hungry and one wants pizza, other one wants sushi. What do you do? So that's where Uber to the rescue.
They are excited about autonomous vehicles. Do you think? What the company is saying, it's the single greatest opportunity. Do you think this will be a goldmine for them? Robot taxis.
I think the jury's out, as in obviously Uber would want robo-taxis to expand their addressable market. Robots would do things that humans won't, so that if you're going on just a 2-mile ride, then robot would do that. If you were going on a 50-mile ride, humans would do that. So things around that. So we are still in a phase where the digestion period of what robotaxis could do and how they fit into the overall mobility kind of puzzle, we're still kind of trying to figure it out. Uber feels that they are at the best position to be that marketplace to find the exact human versus robot at the right price, at the right time, for the right distance. And Uber is the perfect place to figure that out in real time. Time will tell. Right now, we are on the positive side of seeing that near term, Uber should see the benefits. Longer term, say 10 years from now, when we have millions of robots roaming around, we'll probably need to figure out how Uber's position stays there.
Rohit, we're out of time, but what is your rating on the stock right now? Would you recommend people put new money into Uber?
Yes, absolutely. I think so. Thanks for that. We would recommend buying on this weakness. We think Uber over the next 12 to 18 months is positioned very well to generate more than $10 billion in free cash flow, and that translates to a significant upside from current levels.
Thank you very much indeed for joining us, Rohit. Rohit Kulkarni, senior analyst at Roth Capital Partners. Coming up, it's